Right, Sharon, are you comfortable? Can we proceed?
Absolutely. Thank you for sharing the screen, Ivor. I've received it and it doesn't seem to be interfering. So welcome everybody to a really awesome group. I honestly feel that having these events or knowledge sharing sessions are really gathering traction. And I do believe that the industry is far better off knowing and understanding what is happening in worlds that we may just miss or may not be aware of. So once again, a total eye-opener for all of us today. As I hand over to Ivor, who will discuss with us, as if you have a look in your comment section, Ivor has started outlining some of the things quite nicely. Ivor, I'll hand over to you and look forward to spending a fantastic hour with all of you.
Thanks, Sharon, and thank you so much, everybody, for attending. So there is this notion in South Africa that, on the one hand, there is this notion among certainly foreign investors that the problem with BBBEE in South Africa is that the goalposts are always shifting and that they're always moving. Now, that's untrue. It's untrue because we know historically that the first BBBEE scorecard was introduced in 2000. It then went into engagement at NEDLAC, National Economic Development and Labour Council. It then went into engagement at NEDLAC specifically with the purpose that by 2013, the second scorecard would be promulgated. And in fact, between 2003 and 2013, there were very few regulations or even practice notes that came out that changed anything except for elaborating on components of the 2003 first scorecard and code of good practice. So it took 10 years to change scorecard 1 to scorecard 2, indicating that the goalposts really were not moving to the extent that people say they're moving, and they certainly were not changing. They were evolving and being elaborated on, certainly. We're anticipating that we will move into a NEDLAC engagement process now, leading up to the third scorecard, which would be implemented in 2023, 2024. Roughly 10 years between scorecard 1, scorecard 2, and we anticipate scorecard 3. Having said that, though, we are now facing an amendment to the BBBEE Act, which is not going to result in scorecard 3, but it is going to result in an elaboration, a further maturation of scorecard 2. What we're discussing today are the BBBEE amendments out for comment by the 29th of May 2018. It's not the establishment of a third scorecard. It is elaborating on the pre-existing scorecard. At least that is the language being used out there in the marketplace. We can anticipate a NEDLAC engagement process and then a parliamentary engagement process that will in fact be the precursor to the third scorecard, which, as I say, we anticipate around 2023, 2024. Unless other things happen, and lots of things can happen along the way, but certainly to date, the last 20 years has shown that the goalposts don't get moved, maturation does happen, evolution of concepts and elaboration of concepts does happen, but that the goalposts do not get moved to the extent that people think they're being moved. I think that these amendments that are now out are absolutely fantastic. They're fantastic because they make a lot of gray areas absolutely clear, and they're fantastic because they give an opportunity for employers to have much more certainty as to where they stand, particularly in terms of skills development and other very gray areas or areas that have not been elaborated on in the past. I think also they put paid to this notion that a 51% or 100% black-owned business doesn't have to do anything, doesn't have to comply with anything simply because of the percentage of black ownership in those businesses. And while I don't deal with that in my comment, I think it is worthwhile noting by reading the regulation and reading the document. But it's simply an elaboration of what was previously left unsaid, and it's for that reason that I don't comment on it in my feedback document. So, Sharon, I just want to confirm with you that, in fact, both the regulations as well as this document, which is understanding the amendments, was circulated to all of your employer members.
Absolutely, Ivor. Everybody received it in the invitation with the original documents, and then I updated it on Monday with your comments that we added and sent to all the people that had RSVP'd.
All right, lovely. Thank you so much. And we will, I think when we send out the link to this recording, possibly we can just put a library together of attachments again, Sharon, just in case some people didn't get all of the documents.
Will do, Ivor. I will do that.
All right, fantastic. So thank you. So yes, certainly, and I think we heard this yesterday again in Parliament when President Ramaphosa was there to answer questions and make statements. But a major focus of the current drive of the South African government is around this notion of creating a youth employment service in the workplace, of literally bringing workplaces to the youth with a constructed and what I regard as a relatively constructive program designed to benefit the workplace, but undoubtedly as well designed politically to be of service to the youth in this country, who have a major chunk of the voting share come 2019. But what I like is that the YES program has been worked through, it's been worked out, it's not just a political ploy, and it quite frankly makes sense within the context of the workplace in terms of those employers who are able to in fact play with these concepts and start promoting the idea of additional one-year positions in their workplace designed for new entrants under the age of 35. So between the ages of 18 and 35. And in terms of the definition of the race of those yes candidates, they have to be classified as black, which means black, Indian, colored, or Chinese individuals who were either born here or naturalized before 1994. And so the reality then is that we have a definition of black which is comprehensive. These can be the only beneficiaries within the YES program for acknowledgement purposes. And the document also goes far enough to say that for companies which are considered to be large entities doing over 50 million rand turnover and having provincial branches, the profile of your YES candidates must reflect the demographic profile of the province within which you're operating. Companies doing less than 50 million rand turnover will have an opportunity then of reverting to the national demographic profile for who their YES candidates are going to be. Any questions before I carry on with the YES program? Any comments? Any observations? Okay, moving on. So let's... Yes, William, sorry.
Sorry, man. I was struggling to press my button. I just wanted to find out from you. So I've read up somewhere that something about the 20% of your labor force. Yeah.
What about 20% of your labor force?
I've read it in the previous document that you guys send. It says this means that whereas in 2017-18 the company had 100 employees on its payroll in pursuit of the YES, it would have to add an additional 20 12-month employment.
Okay, so you were looking at the case study examples.
Yes, I was looking at that. But what I want to know is that the reflection per region. Does that talk to the 20%? So if I were to be in Cape Town, then that 20% needs to be reflective of the demographics of Cape Town.
In a company which is doing a turnover under 50 million, over 50 million. In a company which is doing a turnover under 50 million, you can revert to the national demographic.
Yeah. Okay, got that.
So in other words, there is a demographic table that shows what the percentage of black male, black female, Indian male, female, colored male, female can be on a national basis, but also on a provincial basis. The provincial breakdowns relate only to those companies doing a turnover more than 50 million, whereas the national demographic relates to those companies under 50 million.
Okay, got it.
Okay, good. And sorry, the 20% was simply an indicator, and I'm going to go into that now. But basically, the formula for headcount is different for companies doing more than 50 million and companies doing less than 50 million. So let's look at the companies doing more than 50 million, because to determine what your yes targets will be is based on one of the following three formulas, and in fact, which one will be the one that results in the highest number. So, so the formulas are 1.5% of your actual head count in the previous year. So I've used an example of 100, where I've said that if your head count was 100 in the previous year, then you would times that 100 by 1.5%, and whatever that was will be the target that you have to achieve. So you'll see there in inverted commas, in the application of the three formulas, I put the number 2. So 2 is in fact 1.5% of a head count of 100. So that's your first formula to get to the first of the three options. Then the next formula to get to the second of the three options, and remember we're looking for the highest number result, says 1.5% of the net profit of the company. Now, I've used again an example where I've said the net profit of the company was 10 million rand. So therefore, 15% of that amount divided by a number of 55,000 rand. So let me just read you the actual definition. 1.5% of the yes entity's average net profit after tax from South African operations, and then you divide that number by 55,000 rand. So 1.5% of your net profit averaged over a 3-year period, which is 10 million rand. So that number there, and I apologize, I am completely incorrect. I didn't check my number, but that amount over there is not 1.5 million. 1.5% of 10 million rand times 1.5% is 150. 1.5%, 1, 2, 3, 1 is 1.5% of 10 million rand is 155,000. It's 150,000 divided by 55,000 gives you roughly 3. So that number there wouldn't be 27. That number there would indeed be 3. Okay. And then the third option is the table on turnover for large entities. And if you look at that table for turnover on large entities, and I'm just going to that table now, and it's table 1 of the regulation. Table 1 of the regulation, and table 1 of the regulation looks at the total revenue, the total amount of revenue a company has done. I'm using here the example of 140 million, and on that table, therefore, it says that between 100 and 149 million rand of total revenue, the minimum number of black youth jobs or YES program jobs that can be created is 8. So therefore, we're in a position to say then that it is the table for the turnover on large entities, namely 8, that will then be determined, as the number. I'm just quickly changing this so it's absolutely accurate, and I'll send you the corrected document by the table. There you go. It is an additional 8 YES employees at any current level of employment and against any job description for a 12-month period. Now, this is absolutely critical for you to understand. There is no prescription on where that yes position has to be created in your company. The only thing that is prescribed is that wherever you decide in the normal course of events, it has to be a job or a jobs in their plural, which would have pre-existed in the year before, number one. And number two, it has to be remunerated on exactly the same cost to company level that your existing jobs are remunerated on at that level in those job categories. So the first thing I want to just reiterate is I've made a correction here. 1.5% of net profit, which is 10 million, is 150,000 and not 1.5 million as was originally indicated in the document. That's the first point. Sorry, 150,000, and you divide that then by 55,000, which is the rack rate cost, which is anticipated by the drafters of this regulation, this amendment, per new YES employee for that 12-month period. It's 55,000. That's not to say that's what you budget or what you spend on those individuals in the workplace, because what you budget and what you spend on those individuals in the workplace is purely and completely up to what you currently pay people in those positions at those grades and on those levels in the workplace. The assumption, however, can be made that in the absence of you having any system in place, the minimum amount that you should be budgeting a year for that new position would be 55,000 Rand, but that is just an untested assumption. All right, that's the formula for large companies. For exempt or qualifying companies, in other words, companies doing less than 50 million Rand a year turnover, you do not have the benefit of looking at headcount numbers. You do not have the benefit of looking at net profit numbers. You can only look one place to identify what your YES target will be, and that place is indeed the table 2 of the document, which is entitled headcount target. Table 2 of the document, Annex B, which is entitled headcount target. And let's say, for argument's sake, the company was doing between 20 and 39 million Rand a year turnover. The YES target headcount therefore would be 2. You would have to achieve 2. If you are doing between 40 and 59 million Rand a year, target, I'm getting myself completely confused. It's not turnover, it's headcount numbers. So the only thing you have to choose from is headcount, not your net profit, and not your turnover figures. You only can choose from your headcount numbers, and choosing from your headcount numbers, if you employ between 20 and 39 employees, your target will be 2. The table says if you employ between 40 and 59 employees, the table will be 3. If you employ 100 to 119 employees, your target would be 6. So it's very, it works from a headcount number of 1 all the way up to a headcount number of 739, and therefore, of 799, and therefore those numbers would reflect the number of YES employees. If, for example, you had 799 people as headcount on your books, you would need to be employing 40 new individuals against the 799 to meet your YES target. Between 1 and 19 employees, it's only 1 individual. Between 780 and 799 employees, it is 40 people. All right, so apologies for the confusion. I just want to reiterate what I said. There are 3 ways of judging, and the highest result is the one that applies to you in a large company doing more than 50 million Rand turnover. There is one way of judging, and that is your headcount target as per table 2, which applies to companies doing less than 50 million Rand. Let me take a quick breather and ask you, are there any questions or points of clarification that need to be made at this stage?
Hi, Ivan. Can you just speak a little bit more on the 55,000 Rand? I know it's a minimum, but is that like per annum? Is that 55,000, obviously?
The 55,000 is the figure which has been included in this regulation specifically to divide the result of your net profit calculation. So 1% of your net profit divided by, specifically to give us an amount to divide that amount by to determine what your target is going to be. There is absolutely no elaboration in this draft amendment as to how the number of 55 was reached, except to say that the assumption, and it's only an assumption, is that it might relate to the average cost of new employment in the first 12 months at an entry-level position in the workplace. But that's simply an assumption. So there's absolutely no way of knowing at this moment in time how they derived the 55,000, except to say that it is the number which is included in the formula. And William, I'm sorry, and I apologize for being so evasive, but if I had more information on that, I would definitely give it to you.
No worries. I think we're all here to help each other, right?
Yeah, we're all here to figure out what might have been in the minds of them, and possibly to give life to define what might have been in the minds of the people who drafted this piece of legislation. So if we apportion, if we say to ourselves and collectively that 55,000 actually then reflects the amount of money, that it costs a company to budget per new employee at an entry level in the company, we have a working definition. If you do that too loudly, however, what it does do to the people who are in control of the amendment and regulation is it might end up getting you down the line an additional schedule that says, yes, that very well might relate to an entry-level position, but as you go higher up the spectrum, so that cost becomes more and more. And of course, there'd be a school of thought that says do it, and that would be a pro-employer school of thought. And then there's a school of thought that says just keep it at 55,000 because anything higher would reduce your targets. Does that make sense, William?
Thank you very much.
All right. Sorry, it's as clear as mud, isn't it?
Ivor, if
All
I
right.
could just
Yes.
direct you to the 3 questions that the ladies have posed on the comments.
Oh, sorry, I'm not seeing those questions. Oh, all right. Sorry, I am now. Is the previous financial year or the last EEA2 reporting period? It's the previous financial year. It refers specifically to the previous financial year. So, in other words, the implication of that is that your yes application would be year on year. There would be an annual, not application to be recognized, but your application of the yes target and measuring yourself against the target would be on an annual basis. That was from Leanne. Leanne, unless you've seen something else in the legislation, please feel free to comment. Pamela says the 55K is a standard formula, or is there a calculation? Pamela, hopefully I've answered that. It is a standard amount included in the formula. I'd imagine that there are a lot of people who are going to want clarification on how they reach the amount, and I'm sure that clarification will come. Magdalena says, please could you explain the benefits of being appointed as a yes employer? Yes, we're going to get there now, Magdalena, and you will see that there are quite instrumental benefits to being appointed as a yes employer. We are going to be getting there. All right, so let's move on then, yes. My next heading is something entitled the yes carrot. What comes next is the really juicy opportunity, however. There are 2 primary incentives to a company being classified as a yes company. The first incentive allows companies to improve their BBBEE level, where the company meets its target and is able to absorb, which means employ on a permanent basis, 2.5% of its target. It will improve its BBBEE recognition by 1 level. For example, if it has been verified as a level 4, it will automatically be entitled to improve its rating to a level 3 because of its having met these criteria. If it achieves 1.5% of that target and it absorbs 5%, not 2.5%, of the yes graduates, let's call them that, it will qualify to move 1 level, but it will also get an extra 3 bonus points on its overall scorecard, which, if your scorecard is at marginal levels, might very well mean that you go up 2 levels. Well, yes, that you go up 2 levels, because the assumption then is that if those 3 bonus points carry you to a new level, those 3 bonus points will kick in, and then you will move up an additional level. However, on further elaboration, and I know the question has been asked, that is an assumption. On further elaboration, it might very well be that what they say is no, you move up one level and then you get your extra 3 points, which if it takes you to the second level is all good and proper. Whether those two things mean, those two scenarios mean the same thing or not is yet to be determined by actual application of examples. And 3, if you double your yes targets, in other words, you don't meet the yes target we worked on initially, which was 8 for a large company, 8 on a head count of 100. But if you double that and you meet 16 on that head count of 100, then in fact, and you are able to absorb 5% of those 16, which is, I think, roughly about 3, isn't it? 5% of the 16, then you will move up 2 levels, not just 1 level. So Magdalene, in answer to your question, there are 3 possible scenarios of benefit. The least benefit is if you meet your target and you employ 2.5% of your target on a full-time basis, you will move up a level. If you meet your target and then by another 50%, in other words, 150% of that target, and you absorb 5% of the people, then you'll move up a level and you'll get an extra 3 bonus points, which might imply moving up 2 levels. But if you double your targets, in other words, you don't meet 8, but you meet 16, and you absorb 5% of that 16, which is, let's assume 3, whatever it works out to, you will move 2 levels automatically. Magdalena, does that answer your question? Magdalene, can you hear us? Oh, you say yes, thanks. Okay, fantastic. All right, so it is tabulated here as examples. Let's say, for example, we have a large entity. All right, and the figure I've used, by the way, as you know, I corrected a little earlier in terms of how that example worked out. But let's say your large entity's target was 27. Your first reward target would be for 27, which means that you would move up 1 level if you employed 2.5% of those 27 afterwards. Your second reward target would then be 150% of that 27, which would mean 41. And your 5% absorption would be 2 of the 41, which and you would then automatically move up 1 level, and you would get 3 additional bonus points. If you manage to double that 27, therefore meeting 54 as your new target, you would move up 2 levels as long as you absorb 3 people into your workplace. Any questions? And then for your QSE, your company doing less than 50 million, the example would be your calculated target is 3. Your first reward, 100% is meeting 3. You employ 1 person, you move up a new level. If you want to get to the second category, which means you have to employ 4.5 or 5 people, we always wind it up upwards, 5 people, where you employ 5% of that 5 people, then you would get 1 level moved up. You would be moved up 1 level and 3 additional bonus points. And if you were in the third category, which means you double that 3 to 6, and you absorb 5% of those 6, you would move up 2 levels. So that is, again, as clear as mud as to how this thing will work out, only because we have to work with the concepts. But this is certainly how we currently interpret these amendments. Leanne says, will there be an opportunity to put our concerns per section, email, report format with specific questions, for example, 11.3.5, point 21 of the draft, etc. Don't want to bog down here with specifics. Leanne, please, if you would send them to me, I will then incorporate them into the feedback document that we're currently preparing for the CCMG, and they would be very, very welcome. And I think importantly as well, they would be welcome for us to be making public in terms of the thoughts and the concerns.
Thank you, Ivo.
All right, excellent. Any questions? Anyone want to actually just deal with any of the issues that have been mentioned so far? All right. I'm just quickly looking for page 21 of the draft in terms of Leanne's comment. Just give me a second, please. Page 21, 11.3.5. So I can't find it, but anyway, we'll get there.
Evil, it's basically with regards to the new jobs must be created in addition to the existing headcount.
Yes.
Entities may not replace existing positions with new positions.
Yes.
So that gets a little confusing where, for instance, in our industry, we use interns for our clients. So now when we're talking about a 12-month fixed term contract, let's say the position evolves, but there is already a current position. It just gets slightly confusing, like you said, as clear as mud.
So, Leanne, can I say two things to you?
Yes.
There is no doubt that this document refers to permanent employees as headcount.
Okay.
And there is no doubt from this document that the target would be in addition permanent employees on headcount. That's the first thing I wanted to say to you.
Okay.
The next thing I wanted to say to you is this, and I know no other way of saying it than just saying it, so please forgive me for saying it. The big target for government, for trade unions in this country at the moment are temporary employment services in South Africa.
Mm-hmm.
Now, I would imagine that the last thing we would want to do is put up a red flag that the contact center sector is predicated on the principle of business as usual around contract workers and temporary employee workers, even though that's the case and that's the culture of the sector.
Mm-hmm.
Because in doing that, the last thing I think we want is an opportunity for anybody to put into these regulations and legislation the idea or the notion that the contact center specifically as a sector would be excluded except insofar as it applies to the permanent employees on the payroll. That would be my imagination, and it's just, or rather what I would imagine you would want to be careful of red flagging formally in a document essentially to NEDLAC and to Parliament, to bring the kind of attention to the contact center sector, which because of the nature of the contact center businesses and the scale necessary, might very well need a temporary employment configuration. Now that's the reality. I'm just concerned that if we raise it at this stage, then it serves whoever the drafters are well, if they did want to be political, it serves them well to say, and we're excluding the contact center sector from being yes employees or yes employers.
You know, well, that would help nobody.
Exactly. However, your concerns are exceptionally eagerly noted or well noted, and I would imagine that if you can send me those concerns, I will raise your concerns with CAPES. Now remember, CAPES is the Confederation of Private Employment Services that was created specifically to represent the temporary and the permanent employment, let's call it the recruitment sector, at NEDLAC and through NEDLAC to government, National Economic Development Labour Council to government.
Yes.
And I know that your concerns will be well noted by Johnny. What's Johnny's surname? I've forgotten for a moment. But by the main legal advisor to CAPES. Oh, Johnny Goldberg, sorry. The main legal advisor to CAPES, and that they will then figure out the best mechanism to ask for clarification, if it is at all possible, on these elements of the definition you've just mentioned.
That's it. I think everyone just wants to, the embodiment of BEE for me is about empowerment. So we don't want to try and find shortcuts, but in the same breath, we need definitions. We need to know what falls within where and how can we make this work, I think, from an employer as well as an employee side.
Leanne, I must tell you, I love your question for the following reason. The principle of joint and several. So there is a principle as far as recruitment agencies are concerned, as far as temporary employment agencies are concerned, of the notion of jointly and severable, that both the recruitment agent as well as the client company are regarded as employers in the process. Mm-hmm. And it might very well be that while the idea of the targets do not apply to your contract or temp workers working in a client company for the client company's purpose, they might very well apply to you as the primary employer as the TES, as the recruitment agent of that individual. And so in that regard, you would be in a position to say to your client company, what you can do, because this regulation makes allowance for it, what you can do is that if you cannot utilize this yes figure in your company for your temp base, you can give us the funding which is required for us to contract with these individuals for a year at a time, and we, the TES, will then count them as our yes numbers on your behalf. Because what this document allows the company to do, the call center company to do, is to fund a yes position in another company, if you see what I'm saying.
Okay, I get it.
So that is a way of you as the TES helping your client to achieve their objective, but not breaking the permanent, temporary, unspoken culture of continuing to do business as usual.
There we go.
So, sorry, Ivor, but how does that affect the client's yes application or yes status?
Excellent question, William. So let's say the client's target is 8 on a head count of 100, just for argument's sake. Let's say the client's target is 8 on their head count of 100, but they can't do that for their TESs. And let's say all the client can do in terms of their budget, in terms of their organogram, is absorb 3 people, not 3 people for 12 months, not 6 people for 12 months. But they have a TES head count from ABC Recruitment Agency. They can turn around to ABC Recruitment Agency and say, if we give you a contractual commitment to continue taking these 3 people or 3 people of the number that you're currently giving us for a minimum of a 12-month period at a time, can you do that? And if you can do that, and we continue to pay you for those people in the normal course of events, over and above what your previous contract was with us for. So if your contract was to supply us with 20 people, it now becomes 23 people. But those last 3 people for a minimum of 12 months as a period, then we are in a position to count those 3 people towards the 3 people we're currently doing internally. In other words, to give us a total complement of 6 additional head staff. William, does that answer your question?
Yeah, it does.
Sorry, I'm going to restate it so that it's very clear for everybody.
Thank you very much.
If a company's target is 6, but it looks at its budget, it looks at its organogram, and it says, I can only absorb 3 for that 12-month period, then it is entitled to turn around to a recruitment company that supplies it with temporary staff and say to them, I've been taking 20 staff from you on an average of 6 months in the last year. I now need to contract with you for 23, in other words, an additional 3, and those last 3 need to be for a minimum of a 12-month contract, not a 6-month contract. If there is an agreement between the contact center company and the recruitment company that that's the way it will be for the next year, the contact center company can then reliably say to itself, I've created my 3 new positions internally for the 12 months, and I have then agreed to fund an additional 3 positions to the external company, which is the recruitment company, over and above the 20 they've normally supplied us with, which gets me my additional 3, and therefore I'm meeting my target of 6.
Okay, got it over.
Good. I think that is, Sharon, and I know you hate me using this term, but that is very sexy, isn't it?
It's incredibly sexy, Ivor, when we work through the logistics, and I'm just thoroughly enjoying the input and the participation. We have really clever people out there, and I'm glad you're being exposed to all of this information.
All right, excellent. Well, thank you for that. Magdalena, you ask, how is the employment tax incentive linked to the yes employee? Now, you will have noticed from Sharon's last communication with you, I wrote up a 1-page memo on it where I said, and this was attached to her last communication with you on the invite, how will the employment tax incentive and the youth empowerment service work together? It should be youth employment service, sorry. These 2 programs, the one, the ETI, created by and falling under SARS, and the other by the Department of Trade and Industry, are designed to work together and to complement one another. The target group for the YES and the ETI programs are identical, namely previously unemployed black people between the ages of 18 and 35. A YES program is designed as a 12-month job with no expectation of gainful employment thereafter, where the job which is created is identical to one of any of the pre-existing jobs in the company. Same pay, same conditions of employment, and subject to the same rules and regulations of any employee in that company. The distinguishing feature is that YES targets are over and above the employment threshold of the year preceding. This means that whereas in 2017-18 the company had 100 employees on its payroll, in pursuit of YES, it would have to add to its target, for example, 20 additional 12-month employees to the original headcount of 100. And William, that's where I think you got that from. That's just a scenario. It's just an example.
That's exactly where I got it from.
Right. An ETI opportunity is the same, except that the employment tax incentive candidate is also allowed to be in full-time training for those 12 months, whereas the amendment out for public comment is silent on whether that is the case for a YES candidate. So as far as ETI is concerned, Magdalena, the ETI person can be in 12 months of training, whereas the YES person, the regulations are silent on whether YES candidates can also be receiving training, in other words, in full-time training, rather than in the workplace. In the absence of clarity, one must assume that it is not the case, and that the YES candidate must be employed in an actual job making a contribution in the workplace. What the ETI does is that it allows the employer to create the YES jobs in pursuit of becoming a YES employer by incorporating the ETI advantage. This means by using the 1,000 Rand a month PAYE diversion, which ETI allows, to offset the costs in creating the new YES position in your company. So as an example, if the total cost of employment for a new YES job is 5,000 Rand a month, the actual cost incurred by the employer would be 5,000 Rand less the 1,000 Rand ETI deduction, PAYE offset, or 4,000 Rand a month for 12 months. The full 5,000 Rand is counted as skills development expenditure under 2.1.1.1 in the second part of the amendments, which is the skills development element. Magdalene, does that answer your question? She says, yes, thank you so much for that. Okay, moving on. Moving on. This is very enjoyable, isn't it, as we work our way through it. Okay. So the second incentive to a company being classified as a YES company is skills offsets. These companies will be able to claim up to 50% of their skills development spend as informal training, whereas non-YES companies can only claim 25% of these categories of expenditure. Now, this is very important. The amendments say that, and we'll get to this in a moment, but the amendments say that the skills development expenditure is divided into three components now. 3.5% of for skills expenditure, 2.5% for expenditure on higher education training, and 0.3% expenditure on disability. That's what the amendments say. As far as the first 3.5% is concerned, which was the historical 6%, as far as the 3.5% is concerned, whereas when it was 6% to be spent on skills development expenditure, it was 15% of that 6% that could be used for non-SAQA regulated or accredited work, in-house training, CPD stuff, the kind of thing that doesn't have to be accredited. That's now been increased to 25% of the 3.5%. It's actually not an increase, because if you work it out, 15% of 6% is in the ballpark of 25% of 3.5%. But it is officially 25% of the 3.5%. However, if the company is a YES company, in other words, they've met their targets, they've employed 2.5% at least and been elevated one level, if they're a YES company, then they're entitled to spend 50% and not 25% of their 3.5% on E, F, and G category training, which is, I'm just going to read it to you. E training is work integrated learning, occupationally directed instructional work-based learning programs not requiring a formal contract and not requiring accreditation. Informal training, occupationally directed informal instructional programs, and for example, conferences, short courses, workshops, seminars, etc., direct instruction, informal training, which is work-based, which is in the workplace, increased understanding of job or work-related or improved performance of skills. So basically the second incentive, Magdalene, is, or whoever asked the question, the second incentive is, as a yes company, you're entitled to spend up to 50% of that 3.5%, not 25% of the 3.5% that would apply to normal companies that are not yes companies. Does that make sense in terms of the question?
Ivan, will you be sending us with the notes these categories or the breakdowns that you just read from now, the category F and G?
So, William, this document here, which is entitled the BEE Amendments, this document was the first document that was in fact distributed to you. Did you not get it?
I can't recall it, eh?
All right, okay, but we'll send the pack out again with the link to this discussion. We'll send the pack out again of all of the documents we can put together. Oh,
thank you so much.
Also says she didn't receive this one. Okay. In fact, what I'll also do is I'll attach to that pack the actual amendment gazette itself for you, so you can get it from the horse's mouth, if I can put it that way. And in no way am I calling the Minister of Trade and Industry a horse. Right. I just want to see the question. Linda says, to qualify for the YES initiative, a company needs to meet the sub-minimum categories and 2.5% spend on bursaries. Do the bursaries... No. Thank you for your question, Linda. Okay. Now, this goes to my very last point that Sharon communicated. And I'm just going to quickly look for that point to show you the point that was communicated. Just give me a second, people. Right. This is the point that Sharon sent out, or part of the invitation she sent out most recently, and I'm just going to read it to you. The thing I didn't comment on in the proposed linking of the YES program to the 2.5% higher education training target. I believe that something like the following may be important to consider in the feedback you may want to give to the DTI. For the Youth Employment Service to work effectively, whichever association would need to submit that it should be delinked to the 2.5% higher education target. At the moment, it's linked to the 2.5% education target. The target is already clearly defined and incentivized within the amendment. To make it a precondition for companies to be declared YES compliant is simply hampering the opportunity to maximize the YES results in the workplace. Not only should there not be preference given to HET graduates, as is now evident from the linking, but it is far more appropriate that employers are free to choose the level at which they create the YES opportunities within their workplaces. In the alternative, should you wish for the link to remain, then restricting the HET link to a minimum of 30% of the YES opportunities created might be wiser and more of an incentive to those workplaces which are able to create more entry and mid-level positions than the more senior ones. So, Linda, in response then to your point, there is general consensus out there amongst consultants and even coming from the DTI that the DTI are strongly considering delinking the 2.5% higher education target, which we're going to talk about in a little while, that 2.5% higher education target, delinking it to the YES targets. And that's what we're hoping will happen. Does that answer your point on the delinking? Then you say, do the bursaries have to be for unemployed people? Yes, the bursaries have to be for unemployed people doing higher education qualifications. Will sponsorship of studies at private colleges registered with the DHET qualify, or must it be at universities? I love your question. So, Linda, I don't know if you participated in the information session, I think 2 information sessions ago that CCMG did, but 2 information sessions ago, we went over the NSDS targets. In fact, it was the first time that the CCMG ran the information sessions. We went over the NSDS targets. And Sharon, perhaps when we put the pack together for everybody, we'll also include the link to the recording on that NSDS presentation. But the new NSDS targets essentially are saying and that's a National Skill Development Plan, and it's the 4th plan that will have been implemented. But that NSDS plan, Linda, actually says that companies are supposed to prefer public training providers. And our feedback and the feedback of the vast majority of companies and associations out there is that that's ridiculous. given that public providers are not considered centers of excellence in the workplace, and therefore business will not restrict itself to only buying training services from public providers. So whatever the NSDS ends up saying once it's finalized, now that the input period has passed, but Linda, whatever they end up saying, the recommendation to companies is going to be, don't spend your money at public or private institutions. Spend your money with institutions where you regard their service and their products as excellent products and services, be they public or private. And no one can do anything to you about that, because this is an absolutely constitutionally illegal requirement that the Department of Higher Education and Training is imposing on the workplace, and it will be resisted by organized business. Again, I know my answer is as clear as mud to you, but that certainly is the way things are going at the moment, Linda. I hope I've answered your question. Magdalena asks, how do you support companies with work readiness costs through YES? Well, Magdalena, the point is, if those work readiness programs are not SACWA accredited programs, then as things stand at the moment, companies can spend up to 15% of their 6% on those programs. With the new amendments being enacted, they'll be able to spend 25% of 3.5%. And importantly, if they are a YES company, they'll be able to spend 50% of the 3.5% on non-SACWA accredited, what you call work readiness programs. Right. Peter says this. This implies that for a large entity, every year the company must employ 27 YES employees So first of all, Peter, and please, I'm misleading you in the document I originally said because I got that number wrong in my calculation. It's actually 8, not 27, on a head count of 100. So on a head count of 100, the company would have to contract 8 people for a 12-month period, and then at the end of that 12-month period, employ either 1 to 3 of those people on a permanent basis. I hope that makes sense, Peter. Peter, are you still there? Okay, moving on. Sidwell says this, on non-accredited programs, is the 50% not only applying to training spend on YES participants, not YES company and the rest? No, it's actually not saying that. It says 50%, and it doesn't say only on the YES participants, Sidwell. There might be a point of clarification, but the way it's written at the moment, and for industry to buy into it, it wouldn't be an incentive if it only applied to the YES candidates. The only way it would be considered an incentive is it applied to everybody. In other words, it could be measured against the spending on the 3.5%. Might not be politically correct to interpret that way, but if that's factually and legally the way to interpret it, that's certainly the way we will interpret it, I would imagine. Peter then says, to claim 50% of skills development will be 50% of all money spent on all 127. Yes, hopefully I've just answered that question, Peter. Linda says, thank you for the clarification. Peter says yes. Okay. Thanks very much, guys. Let's move on. All right. And I've already mentioned this point where in the document I say an alleviator is that where companies can't spend the YES money, they can spend it with other companies that can absorb those people and count it towards its own targets. All right. So that's the YES program. And if there are no outstanding questions on the YES program, which for me is the most instrumental component of this amendment, let's move on then. So now we talk about the evolution of the skills development element. And in this discussion, I'm referring to the fact that 6% of payroll target that currently is the target to meet your skills development expenditure has now been broken up into 3 areas. It's been broken up into the area of, and I don't put this in order, I just put this in terms of factors. Sorry, just before I get there, Peter's asked another question. May the same YES employees be employed again in the second year as a YES employee to finish his training, as, for example, an apprentice must train for 3 years? Peter, that's the most amazing question. It's not a question which is dealt with at all in the amendment, and it certainly is a question that should factor, I believe, in the feedback that is given to the Department of Trade and Industry. So thank you so much for that question. There is nothing saying that someone who is not employed on a permanent basis at the end of a YES program cannot be recontracted as a YES candidate. It's a fantastic question, and it opens up huge opportunities around apprenticeships that certainly I wasn't even thinking about. So thank you for that question, Peter. All right. Disability spend, 2.1.1.3. dealing with one of the few unclear inclusions in this amendment, it is unclear whether the 0.3% spend on black disabled employees is included in the target on black people or is an additional target. As there is no clarity on this particular target, we have to assume that it is in addition to 2.1.1.1, and therefore that the new overall level of spending on skills is 6.3% rather than the 6% that it currently is. And that it would therefore have increased by that disability amount of 0.3%. However, what this regulation does say, which in my opinion is unacceptable, given the current rate of decay of opportunities for people with disabilities out there, is this. It says that that amount of money, that 0.3%, needs to be spent only on current disabled employees. Needs to be spent only on current disabled employees. Now, in many different respects, that is disingenuous at the very least, because the reality is that the vast majority of employees are not disabled, and that those people who are disabled in the workplace are not always going to be benefiting as much as what we call 18.2 beneficiaries might very well be able to benefit. So the way it currently reads at the moment, it says specifically 0.3% only on disabled people employed in the workplace. So in other words, it doesn't allow for reasonable accommodation training either of the workplace or of the potentially new candidates coming into the workplace who would be unemployed. It doesn't allow for any of that to happen. So it has to be considered as unfair because of that problem. I don't know, are there any thoughts out there? Do you have any thoughts on that? I'm just going to read you 2.1.1.3. It says, skills development expenditure on learning programs specified in the learning program matrix for black employees with disabilities as a percentage of leviable amount for black employees. And so we would want to interpret that as for black employees who are either 18.1, who are currently employed, or 18.2, who are on learnerships or internships coming into the workplace who aren't yet employed. I don't think it's going to be a big argument or a big fight. I just think it needs clarification. So that's disability spend, 0.3% of what we assume to be 6.3% as the total amount of skills development spend which is required. Peter says, the spending on presently employed disabled persons is restrictive, as we can only train a disabled person so much because of the disability. Yes, Peter, and certainly history or research has indicated that the vast majority of the important training needs to take place before that individual gets to the workplace. So I think your point is completely correct, and thank you for making that point. Skills development expenditure, the next category, is 2.1.1.1. And this is the old 6% of payroll, which is now 3.5% of payroll. It remains unclear whether the 6% incorporates the 1% existing skills levy or not. There is, in fact, only one industry or sector that has clarified that to date in any of its amendments or regulations, and that's a construction charter in the construction sector, where that specifically said that the 1% is incorporated in the 6%. The amendment continues to not make reference at all to the prevailing skills levy. To ensure that companies are not disadvantaged by this change when it comes to expenditure on in-company and unregulated training interventions, the percentage allowance, okay, so I've already spoken about that, but let's just talk about the 1% for a moment. What this means is, how much should you be spending on skills development? Is it 6.3% in total? Or is it 6.3% plus your 1% regulated skills development levy? Only one industry has specified that, and that's the construction sector in its construction sector code historically, where it is said that the 1% regulated skills levy is incorporated into the 6%. Otherwise, both the generic codes and all other sector codes have been absolutely silent and quiet. It is, I suppose, therefore at the discretion of your rating agent to choose which way they would want to go on that. I would imagine that we're pretty comfortable saying we'll include it in the 3.5%. until such time as there is an amendment to the regulation, an amendment to the amendment clarifying that it's not included, it has to be over and above. Any points or comments on that? It's quite an important thing to understand that your actual expenditure on skills development might be 7.3% if we don't clarify it. All right, moving on. The third category is this now. And this is government basically pandering to the campaigns over the last 3 years for fees must fall. Obviously, government are saying they don't want to fund fees must fall out of the fiscus. They want to fund it, they want business to fund it. And so they've introduced 2.1.1.2 that says we are going to strip your 6% skills expenditure down to 3.5% plus 0.3%. And we're going to take 2.5% and use it to fund institutions of higher education and training so that we can say to those people out there demonstrating, you see, we've done something about it. We're actually going to make business pay for your free education. Up until now, business has been silent. Business Unity South Africa has said, well, they haven't said anything. NEDLAC has not even debated the idea. It seems to be plain sailing for the Department of Higher Education and Training not to take responsibility for the mechanism it's going to use politically in this country, but to hand that responsibility over to the workplace on the one hand, and on the other hand, to rob the workplace of 2.5% of what it should be spending on its own skills development, either existing labor pools or future labor pools. That's one way of reading this document. Another way of reading this document is that the minister is saying the workplace, 2.5% of your spend must be spent on higher education qualifications. But if you are clever and you work collectively as employers in your industry and you work with your association and your professional body, you can gear that expenditure towards meeting scarce skill needs in your industry and your sector. It doesn't just have to be bursaries that you give to Wits University and count it towards your skills spend. It's critically important that you look at that from a positive perspective as an opportunity to create degree and postgraduate degree and postgraduate degree opportunities which enhance your company, your industry, and your sector, and not simply as a new 2.5% tax for you to fund fees must fall. Let me stop at this stage and ask you what your views are on 2.1.1.2. Anybody like to comment? Anyone want to comment? Are you comfortable with the notion that 2.5% of your skills expenditure in your business has to be spent on higher education qualifications, primarily, I suppose, at public universities, but there are a number of private universities also offering those qualifications? Okay, so Neil says all good. Okay, so let's then move on. Oh, Peter says, this year, TETA, which is the transport SETA, got much less funding for learnerships and apprenticeships because the money went to higher education and training. So what you mean, Peter, is that this year, the transport SETA got far less National Skills Fund subsidies, if you want, or co-funding or joint funding from the National Skills Fund, and that in fact, within TETA itself, a lot of its pivotal funds were swept and its unspent funds were swept back into the National Skills Fund so that the Department of Higher Education and Training could fund fees must fall for political reasons rather than business-related reasons. I think that's what you're saying, Peter. Peter says, what will they do if the non-higher education training unemployed start marching? Good question. Thank you for that, Peter. Moving on. Okay. So, ladies and gentlemen, I do in the document, I'm not going to go over it, I talk about positioning your industry bodies at the forefront of the higher education target. I have alluded to it. I think it's important that you read that point and you think seriously about the role which your employer association is intending to play in ensuring that you grab hold of that 2.5% budget and you use it, you fashion it into a designation taxonomy which makes sense for your workplaces and not simply for your company to give bursary funding to Wits or to UJ, which has nothing to do with your company. All right, moving on. Distinguishing spend on basic education and training from higher education and training. It is important to note that whereas the new target makes allowance for expenditure of 2.5% of payroll with higher education and training institutions, expenditure on all basic education and training institutions is incorporated into the first 3.5% of the payroll target, 2.1.1.1. A interesting inclusion. Sidwell says, my understanding is that it can be either higher education or basic education. Sidwell, I will read it to you. Just give me 1 second, please. I will read it to you. It says, 2.1, skills development expenditure on bursaries for black students at higher education institutions. That's 2.1.1.2. Sidwell, you do say here as well, 1% skills levy deemed included in the overall skills spent target. That's how business and industries and sectors are interpreting it. It's not what is said in any of the regulations. But Sidwell, you're quite right. We will leave it as an unspoken promise that we can include that 1% in the 6% or that 1% in the 3.5%. Or in fact, interesting, do we include the 1% in the 3.5% or do we include the 1% in the 2.5%? It just makes for an interesting debate. He says, refer to 5.6 schools included, it would seem. Sidwell, 5.6 is where? Please just refer me to that. 5.6 page. 5.6. I don't have a 5.6. I'm looking at page 10 and it jumps from 5.5 to 6. So, well, if you could refer me to it, I'd appreciate that. Maybe it's in the skills side of things. Let's just have a look. The skills component.
34.
Page 34. I'm just quickly going there. Thank you so much. 5.6. Expenses on scholarships and bursaries for black people do not constitute skills development expenditure. If the measured entity can, okay, that's just a bursary scholarship scheme is a grant made to all for students who are registered educational institutions. That's a definition of bursaries or scholarships. It's not a definition of 2.1.1.2. So the definition of bursaries and scholarships is quite correct, but it's got nothing to do with what 2.1.1.1.2 says. So I think that's the important thing. That definition would then fall into 2.1.1.1.1.1 or whatever it is. Okay. Akshata Ravi says, can we get this document sent to us post the call? Absolutely. Akshata, what we're saying is we'll send you a pack of documents post the call, plus the reference to the recording we did of our NSDS information session, plus the reference to this particular recording once it is posted. Sharon, I'm not sure where you post it, but wherever you post it. Good.
Ivor, I think this pack is getting larger and larger, and I don't think the emails will accept it. So what I am going to do is I will send you the link to the website where the Employers Association documentation is kept. It is on the CCMG website.
Excellent.
You'll see Employers Association, and I will now get them to log all those calls and all these documents. Most of them are already there. As you sent them to us, Ivor, we've logged them on the Employers Association section of the website, and we'll include these voice recordings as well.
Sorry, Sharon, you dropped off there, but I'm sure we get the point. So thank you for that. Okay. Okay. Now this is quite nice, and again, I'm going to use the term sexy. There is a provision which is made for the skills development facilitator or the training manager to be funded out of up to 15% of your 3.5% target. So up to 15%. Companies can spend up to 15% of the 3.5% target stipulated in 2.1.1.1 on the activity of funding a skills development facilitator or training manager. If you remember, the original mandatory grant made allowance for a skills development facilitator to be funded. They then changed that and they took it out. Now they are including it in the interpretation of where the 3.5% of payroll can be spent under 2.1.1.1. So that's quite interesting. You can offset some of the costs of the employment of your SDF or training manager or your contracted consultant in this regard, you can offset those costs up to 15% of your 3.5% target stipulated. Okay, now E is quite important. The amendment introduces the concept of a stipend paid to bursary recipients. Sorry, Sidwell says, may I confirm that tuition assistance for current employees will be included as bursary spent as well towards the 2.5% target? May I confirm that tuition assistance for current employees will be included as bursary? Sidwell, you know, that's a good question. The amendment is absolutely silent on whether that 2.5% is 18.1 or 18.2. And I think that that's a very important question that needs to be clarified. The assumption is that it's 18.2. In other words, currently unemployed people who wish to go for higher education full-time programming. However, that is simply an assumption, and we should make the assumption that it is both 18.1 or 18.2 until and unless the time that it is further clarified. So thank you for that, Sidwell. We will definitely put that in our feedback to the Department of Trade and Industries. A very important question. Point number E says, we talk about the fact that the amendment introduces the concept of a stipend paid to a bursary recipient. That stipend paid to the bursary recipient under 2.1.1.2, in other words, the person who goes to university, will constitute skills development expenditure. It is, however, silent on the amount of the stipend and appears to leave it to the company's discretion. In 5.6, the amendment goes further to provide examples of legitimate training costs for bursaries or scholarships, which include fees, textbooks, and other learning material, and subsistence or accommodation costs during the period of study. So basically, this point says that if a company needs to spend more money on skills development to meet its own skills development target, and it elects to do that by offering the people that it offers bursaries to, under 2.1.1.2, by offering them a stipend as well, that stipend can be counted as skills development expenditure, and there is no regulatory component at the moment that says how much that stipend can or should be. So it's just a point to take note of as you prepare yourselves for your meetings with your rating agencies, in terms of being able to refer to that should you wish to do that. There is a glaring omission in this amendment when it comes to professional designations. Whereas professional designations are registered with SAQA and they referenced on the National Learner Records database, there is no reference to employers being able to claim legitimate professional body expenditure for the attainment of professional designations by employees or in pre-qualifying labor pools for future employment purposes. Whereas Annexure 300 makes allowance for 7 categories of training, the only reference to professional bodies is in reference to the particular type of learnership which recognizes structured experiential learning in the workplace. So this in no way goes far enough to incorporate professional designation expenditure, which is the core vehicle managed by professional bodies designed to distinguish qualifications from professional recognition. Many employers choose to prioritize a designation over a qualification because the designation incorporates industry sectoral criteria for qualifying to be recognized as a professional over and above any earned qualification, whereas provider-based qualifications do not have the credibility which automatically satisfies the competence and the behavioral needs of employers. So Sharon, this is a very important point for you and the professional body to consider.
Thank you, Ivor. Yes, we have already started discussing it.
Leanne mentions, she says, exactly such as the South African Board for Personnel Practice. I suppose you could say that, but yeah, I suppose you could say that, Leanne, but I suppose also it's very dependent on which professional body. And the reason I say that is this. The contact center calls, the contact center professional body deals specifically with employers. In other words, employers of the CCMG membership, the Employer Association membership, would ordinarily want their employees to receive designations from their professional body. So the target market is the employer base as much as the employee base. SABPP, on the other hand, outside of a handful of dedicated human resource companies, As a professional body, it doesn't have an employer base. There are no dedicated human resource practitioner employers out there outside of consulting businesses and a handful of other businesses. So there are different kinds of professional bodies. But the principle is the same. You're quite correct, and the principle is absolutely the same. Okay. Right. Additional observations. The scorecard is a table which sets out the weighting considerations of 5 elements against which measured entity is verified. It is important to read and understand all of the minimum targets on that scorecard. So a company doing more than 50 million rand a year turnover has minimum targets. There's a compulsory target on ownership, 40% of the ownership target. There's a minimum compulsory target either on skills development or enterprise, supplier, and procurement. So either of those two. And I always recommend to clients that they rotate those two. So one year they'll do skills, the other year they'll measure themselves against the other one. And there you've got minimum targets which have been established and set up that companies must be aware of. The regulation also makes allowance for the recognition of joint ventures and for startup enterprises. And the good thing about startup enterprises is that generally a startup enterprise is classified as an exempt business for the first year, irrespective of what their turnover is, unless the companies that they're applying and tendering to are companies that are large size companies, in which case they have to consider themselves to be measured against the qualifying scorecard. All right. So we've spoken a lot. I do apologize for the fact that we've gone about 20 minutes over our time. I know there is a lot to take in. We will prepare an email to you making reference to what's on the CCMG portal in terms of resources and documents. And hopefully, ladies and gentlemen, the session has been as informative as mud to you in terms of how we're proceeding with responding to the BEE amendments, which are out for comment by the 29th of May. Any final comments?
I think either from the Employers Association.
Good. Sharon, are you comfortable with where we're going?
Yeah, let me comment. I think from the Employers Association, of which all of these individuals are part of, their participation has been fantastic. Again, an awesome eye-opener. And we continue with these. And, our next session again is on the all the internet regulations, and that is being sent out today and will happen on the 23rd of May. So we look forward to having the appropriate people in your company participating in that conversation. But Ivor, again, fantastic. You can see all the comments that are coming in. Again, I think you have done a sterling job. So thank you very much.
I just, while we've got everybody on the line, I think there's another information session that we should be scheduling after the internet discussion, and that is around the establishment of procurement standards in the contact center sector for the various industries that the contact center sectors buy business from, procure services and products from. Now, what I mean by that is, in terms of the procurement standard of BBBEE, which is housed in the enterprise supplier development element, so the second last of the 5 elements. A company is required to have a standard that it measures its suppliers against. And I'm suggesting that it's impossible to expect every company to do what is not its core business, which is to establish its procurement standards for media companies, for recruitment companies, etc., etc. And so what I'm suggesting then is we have a general discussion for the procurement divisions of your contact center clients or your contact center member companies, where in fact in that discussion we talk about establishing procurement standards per industry amongst, let's say, a highlighted section of 10 industries that you're all dealing with in one way or another. Because that then allows you, when you're measured by your rating agency, it allows you to have a standard that you show your rating agency that you're measuring your suppliers against in those 10 industry categories. It just helps you with the evidence you need for your rating agents to accept your versions of the truth that you're presenting to them. I don't know if there's any comment in that regard.
I think Peter's comment is quite valid. And yes, we will do. Is it possible to prepare a one-pager that summarizes this?
Yes, of course we will do that. We'll do that and we'll get it out to you post haste. Thanks for that, Peter. All right. So thank you, everybody, and thank you for your very positive interest. I mean, your comments and the points you've made. There was just one point I wanted to read out, and that's this. Faith says, for employees, there are conditions for the bursaries. Can we put conditions for the students' work back? Absolutely, you can put conditions. Now, in fact, the regulation deals with those work back conditions. And if you go too far in your work back requirements, it could exclude that expenditure from being regarded as 2.1.1.2 expenditure. So have a look at the regulations because it deals very, very specifically with that instance and that question that you've just asked, Faith. So thank you for that. If you want to, you can send me that question as an email, and I'm very happy to send you back an explanation of what I mean in that regard, and then we'll send it on to everybody as a point of information. So Sharon, thank you for the opportunity. I love doing these sessions, and we'll be in touch, guys.
Thank you, everybody. And if there are any comments or any feedback that you want to give us with regards to this, as you can see, we've already prepared comments that are going back. So we'll happily add yours in, but please can I have them by the latest next week, Friday, so that we can incorporate it, do something which is solid, and then get it off by the end of the month, because that's when participation closes.
Thank you all so much.
Have a great day.
Thank you.